multi-time frame analysis can make you lots of money or lose a lot if you don't know how to use it correctly. So today I will show you guys what multi-time frame analysis is, how it works, and I will also show you a MTF trading strategy step by step. But alright, so before we can start with our multi-time frame analysis, we of course need to know what is multi-time frame analysis in the first place. Well, multi-time frame analysis in trading, or MTF, basically means analyzing the same market but on different time frames. So you might, for example, look at the daily time frame, the 4-hour time frame, and the 1-hour time frame. Or this is more if you are maybe a swing trader, or if you are a day trader, you might be looking at maybe the 1 hour, the 15-minute, and the 3-minute time frame, and so on and so on. But multi-time frame analysis is basically that you look at multiple time frames at the same time, and it will help you see both the big picture trend and also the more short-term price movement. So you are both zooming in and zooming out. So the higher time frames, like for example the daily, shows the overall trend and key support and resistance levels and key market structure, while the lower time frames can help you with precise entries and exits. So where should you buy and where should you sell? But alright, so now then, why should you use multi-time frame analysis? Well, the first reason here is to stay aligned with the bigger trend. So for most trading strategies, it's often a good idea to trade in the same direction as the trend. You know, a very common trading strategy that we will look at later on in this video is trading pullbacks. But there are tons of other, trend trading strategies. So many times using multi-time frame analysis is a good way to align with the trend. But there are other reasons as well. It can actually help you avoid false signals because the high time frames can help you filter out the lower quality trades. It can also improve your timing, get more precise entries, because use of lower time frames can get you more specific entry points. It can also actually boost your confidence. So when you have multiple signals aligning at the same time, or in other words, you get confidence from multiple time frames, it can improve your confidence in the trade. And last but definitely not least, it can also improve your risk management because you get clearer context and you can get more precise stop loss levels and so on and so on. So all of these are potential benefits for multi-time frame analysis. However, the sort of downside is that it is a harder method than just trading one time frame. But right, so now then, what are the best time frames when it comes to multi-time frame analysis? Well, here are a few combinations. So for day trading, you can, for example, use the 15-minute, the 1 hour, and the 4 hour. Or you can use the 5-minute, 15-minute, and 1 hour. These are two common time frames for day trading, and some traders also, instead of using 3 different time frames, you can definitely use only 2 different time frames. That is another, definitely valid method. Because 3 time frames for many traders, especially beginners, it can be hard to keep track of 3 time frames at the same time. But when you do that, you can get more precision as well. So if you have the time to practice, definitely consider 3. For swing trading, you can look out for this combination, 1 hour, 4 hour, and daily. This is a bit of a shorter term swing trading, but you can also do a 4-hour daily and weekly combination. Another combination that is not as common is to start on the weekly, go down to the daily, and then go all the way down to the 1 hour time frame. This is actually a combination I will show you guys later in this video. And this one, many traders will probably say that this one is not that good, because from the weekly to daily, this is a step of 7, but from the daily to 1 hour, this is a step of 24x. And most of the time you want the step between the time frames to be the same. But the upside with this trading strategy is that you get the really long-term trend, while the 1 hour time frame gives you very, precise, can at least give you very precise entries. So this is a, time frame I have been looking at recently that you can definitely consider. I'm not saying that this is the best time frame or anything like that. So as always, I want you guys to experiment a bit on your own. You can use paper trading and similar things to test what works for you. And by the way, guys, if you don't know what paper trading is and want to get started with paper trading, that is basically when you can practice with fake money. So you can practice your strategies before you use them. I do have a video about that, and I'll make sure to link the video in the video card and the description. But now, how do we use the time frames? Well, there are tons of different trading strategies you can use, but the general method is usually something like this. You use the higher time frame to define the trend. So this is, for example, the daily time frame. Then you use the middle time frame to spot the setups. So this could be, for example, the 4 hour, while you use the lower time frame to get your buy signals and sell signals. This could be, for example, the 1 hour time frame. But all right, so now let's take a look at a multi-time frame trading strategy step by step. And I actually have a total of 3 trading strategies I want to show you guys. But in this video, I do think I might only have time to show 1. But as always, I will make sure to post the rest of the strategies and this full presentation for our YouTube channel members. If you didn't know, we have an amazing community right here on YouTube where I post presentations like this one right here, exclusive videos, exclusive trading tools, and much more. So if you want to get access to more content while at the same time supporting the channel, please consider becoming a channel member by clicking join down below. But now let's take a look at this trading strategy. So this strategy is simply called trend and pullback strategy. And the goal here is to find the trend on the higher time frame. Then you want to wait for a pullback on the medium time frame, and then you use the lower time frame for confirmation. So this is where you look out for example, a clear candlestick signal or some kind of momentum candle or other types of price action signals. This is also where you use your risk management, so you define your profit target and stop loss and so on and so on. But all right, so now let's jump into TradingView and take a look at how this trading strategy can look like in action. But first of all, as you can see right here, I'm currently looking at 3 charts at the same time. And you might be wondering, how do I do this with my own TradingView? Well, what you need to do is that you need to go up here to where it says layout setup. And then you can see you can have 1 screen, 2 screens, you can have all the way up to 16 screens, but that is for much more advanced traders. I think a good, as I said, a good, multi-time frame analysis is, in my opinion, either 3 or 2. So you want to choose, and the one I prefer is this one right here. Some traders prefer to have it on horizontal, but I prefer to have it vertical, so I'm going to choose this one right here. And I can already mention that I'm not sure that this is available on TradingView free, but don't worry, because I do have a special TradingView link that you can use to try out TradingView Premium for free for 30 days, so you can follow along on this video. And after your trial, you will also get a $15 bonus. So make sure to use that link so you can follow along in this video. But what I then did was that I opened up, Bitcoin here on 3 time frames. So right here we have the weekly time frame, and this is where I look out for the long-term trend. Right here I have the daily time frame, and right here what most people will do is to zoom into the 4 hour time frame, but I zoomed in all the way to the 1 hour time frame to find precise entry. But now you won't wonder, okay, so that on the weekly time frame, we want to look out for the overall trend. And you might wonder, how do we find the overall trend? Well, there are a few different methods, but my favorite method is to use something called market structure. And market structure is basically a concept you use you don't use any indicators. You basically use specific and mechanical rules to find highs and lows in the market. So for example, right here to the left, you can hopefully see that recently Bitcoin have been in a clear uptrend. You can see we have a low, high, low, high, low. And as long as the price is printing consecutive higher highs and higher lows, we are in an uptrend. And you can see that recently we printed yet another higher high, right? If you are not really confident about market structure, don't worry, because I do have a full market structure trading course right here on YouTube, and I highly recommend to check that one out. But meanwhile, if you're not certain in market structure, you can use some help tools like a moving average. You can see that right here we do have a 50 simple 50 SMA on the chart that can help you identify the trend as well. But when we are done here on the weekly time frame, we have identified that we are in a long-term uptrend on the weekly. Now it's time to move one step further or one step closer to the chart and move on to the daily time frame. Here on the daily time frame, we're looking for the sort of overall setup. So you can look out for things like chart patterns. For example, right here on daily, you can see that recently Bitcoin have been, having impulsive moves, pull back, impulsive moves, pull back, impulsive move, pull back. And you can see that this pullback right here was actually pretty much a symmetrical triangle. Or you can also look at this one as a bullish flag, right? We have the impulsive move, the price pull back, and we look for the breakout. And so we identify the chart pattern right here on the daily time frame. By the way, if you need help in identifying chart patterns, don't worry about that, because I do have a full chart pattern course right here on YouTube, and I will make sure to link it up in the video card and the comments below. But all right, so now let's zoom in even more to the 1 hour time frame. And the first thing you can see here on the 1 hour is that we were in a very clear symmetrical triangle. And if we zoom in here, you can also see that we got a very nice breakout, or at least it looked like we had a nice breakout right here, right? However, if you look at this trade, you can actually see that it wasn't really a good trade, or at least it's very possible that you would have gotten stopped out, because let's say you enter right here. Let's say that you use a risk reward ratio of 2, or let me actually say that, let's say we place our stop loss below the low right here, risk reward ratio of 2. You can see that you would have actually failed this trade right here. And this right here is the reality of trading. Not all setups works. But what we can do is that we can look back a little bit here and see, was this really a good breakout? Well, we did see a momentum candle, and that is a good sign. But one thing I didn't really like about this breakout is that we didn't see too much volume coming in. You can see right here, we saw a little spike in volume, but it was quite okay. It could have been better. But this right here was a failed entry, unless you had a very broad stop loss. So maybe you had a much broader stop loss down here, then you could have made some money. But this wasn't this was a failed trade. But what I do want to look at here, if you look a bit more to the right, is that the price eventually came down to a key level. We saw a little bounce, and then it tested this one right once again. So here we actually had a double bottom pattern. And what was even more significant with this double bottom pattern was that, look at the volume. We had massive volume on this pattern, and we also, these two candles together, printed a bullish engulfing pattern. And this is why it's so important to use price action on the shorter term time frame. Yes, we saw an okay breakout right here, but this double bottom setup, which was much better in my opinion. We had the volume coming in, we had a bullish engulfing pattern, and what you also can see is that the support line from the symmetrical triangle is still valid right here. You can see it bounces on the upward sloping support, right? So this, in my opinion, much better setup, but I still wanted to show you guys this failed breakout right here, because that is the reality of markets. But alright guys, so if you want to avoid losses like the one I showed in this video, it's so important to learn more about price action. So if you have the time, I highly recommend to check out my full price action trading course right here on YouTube. Just click on the screen right here.